Welcome to Cambridge House Live. I'm Bridget Anderson, and David Franklin is with me, market strategist with Sprott Asset Management. Nice to see you, David.
Thank you. Nice to see you too.
Let's start off with what everybody seems to be talking about right now. What has been happening with gold? What do you see going on there?
Well, of course, we know that there was a huge sell-off in mid-April, and I think we look at that as we've dissected the trading statistics that we've been able to find on it. It's an uneconomic amount of gold was dumped on the market at the most illiquid point in time, and I think what that really speaks to, and what's been highlighted since, is the difference between paper gold and real gold. Mm-hmm. And this was after the sell-off in 2008, we didn't see a supply response like we've seen in April. So it is really bifurcating the gold market into a paper, financial type market, and of course a physical one.
And so what do investors need to learn from that?
Well, I think what investors should take away from that is none of the fundamentals that brought gold from $200 or $250 to $1,900 have changed. The countries around the world continue to support their economies by printing dollars. Japan is a fantastic recent example. They're going to double their monetary base. And so these financial sell-offs should be taken advantage of by investors. And the supply response, or the physical metal purchasing we've seen very recently, has occurred all over the world: New York and London and Tokyo and Australia and the Southeast Asia. So investors are taking advantage of these financial market machinations to put physical gold in their portfolio.
And what should investors be looking for in the near term with gold? Should they be bracing for more volatility, and also, in addition to that, is there more upside there?
Well, absolutely. I believe there's more upside. Recently, for anybody who's a chartist, gold had tested its low from that on April 16th, and it didn't break below it. So that's a very positive sign that perhaps we've hit a double bottom in gold, mm-hmm. and we'll continue on. So I think the key message, though, that investors should take away is I believe we will see more of these more financial market machinations of the gold price, and using them as an opportunity to add physical is a fantastic strategy.
Let's switch gears and talk about the junior resource sector. It has, no question, taken a beating. When will we see the bottom, or when will we know we've seen the bottom? That's perhaps the better question.
Sure. Well, I was talking with Rick Rule, who's at Sprott, about this, and we like to talk about, well, if the private sector can do anything, the government can do better. And so as the governments of the world have been really good at printing paper and false dollars, so to speak, the junior companies have been very good at printing stock, and mm-hmm. so there's a lot of extra stock out there in these juniors, and there's a lot of projects that were financed and management teams that were financed that frankly didn't deserve to be. And so very healthy, as in any market, we're seeing this sort of a filter of the good projects from the bad ones, and there'll be long-term survivors of those who have good economic projects in good areas of the world. And so the numbers that I ran a few days ago were 50% of the companies on the venture only have $500,000 on their balance sheet.
And that's a really important thing for investors to pay attention to.
That's right. That's right. If you some of these, arguably half of these companies won't survive another year with this amount of cash. So for investors, this is a natural culling of the herd, so to speak, of these junior resource companies. But the baby's been thrown out with the bathwater, so half of them won't be here. The other half have fantastic economic projects that will move forward and be mines, and that's the real opportunity today for investors.
And what about some of the majors then? When it's a totally different situation than what's happening in the junior mining sector, but there's less to choose from too. And does that make it then a good buying opportunity when you're looking at some of the major companies?
Well, the majors are experiencing trouble as well. Mm-hmm. Some of them have taken on debt, and they're going to have problems servicing that. So they are selling assets at fire sale prices to try and cover the mistakes that they made. I mean,
and less money to buy some of the juniors.
That's right. And if you want to speak about errors, I mean, there's some spectacular errors that were made by the majors that have taken write-downs. Coming into this year, they'd written down almost $100 billion worth of projects that they had purchased over this run-up. So there's $100 billion gone from their balance sheet that they need to figure out a way to recover. So.
And how, do you see this recovery more as a longer-term recovery, something that's going to take some time?
Well, this is it's a natural cycle. We've seen it. We saw it in the late '90s. We saw it in the early '90s, and there are pockets of the resource sector. I mean, we're speaking about gold and silver, perhaps, but there are some areas of the resource sector that are poised to go on fire in the next.
Platinum and palladium.
Platinum
Let's
and palladium.
talk about it.
Sure. That's only one of them. There's many others that are poised for higher prices and better times ahead. So
let's focus for a minute or two then on platinum and palladium. Where do you see that going?
Sure. Well, when you look at platinum and palladium over the long term, it's just been a disaster for the mining companies in platinum and palladium. And I'm speaking specifically to the South African companies that mine it. The cost of producing platinum has gone through the roof for them. For example, Implats, which is one of the second largest miner of platinum, they announced last week that their marginal cost of production is $1,760. Today, the platinum price is $1,460. So they're losing $300 per ounce on every ounce that they produce. So this is not a long-term situation. Either they need to shut down production, or they need to, or the platinum price needs to rise.
And demand is still going to be high.
And demand is consistent. So, platinum is used in diesel engines and vehicles that use diesel motors. Platinum, so it's been consistent this past year, despite whatever we've heard about in Europe. It's been consistent. So there's a deficit in the marketplace. And it's a fantastic opportunity for resource investors to buy the physical platinum. And as I said, the miners are not making any money. They are not earning their cost of capital. They're destroying shareholder value. But the opportunities in the metal that they produce.
And where are you seeing some of the other buying opportunities then?
Well, the other opportunity is palladium, where there's been a supply overhang in the market. To the tune of about 1 million ounces a year. So last year, for the first time in 10, the palladium market was in deficit by about 1 million ounces. And that's 1 million ounces on an 8 million ounce market. So it's a significant deficit. And the reason for that was there were Russian stockpiles that were being put onto the market as a byproduct of nickel mining. And they came out at the end of last year and said, we're almost out, we've almost depleted our stores. So there's a huge gaping hole in the palladium market. Demand continues to expand. So as resource investors, there's lots of opportunities out there to redeploy capital and take it out of these juniors perhaps and put it into different areas.
Being able to determine where those buying opportunities are.
That's right. That's right. I mean, there's a whole list of them. I mean, that's our job at Sprott, is to find these. I mean, another one is natural gas, where we think we've hit the bottom, and natural gas has doubled in the last 12 months. So we think there's going to be, we think it's going to continue to rise. So there's lots of opportunities in those companies that are producing natural gas. And as Rick Rule said in his keynote speech, either you're a contrarian or a victim. So most people have written off the natural gas sector, but that's where we think things are just starting to heat up.
Well, we'll be watching for more insight from you guys for sure. Thanks very much, David.
Thank you.